Is there gas in the tank for stocks to rally from here? We will explore that topic today. Plus, the most important thing we can do together is to do chart reading the Wyckoff way, a continuation of the series on evaluating individual stocks, indexes, etc. With the Wyckoff methodology. I have a great case study for you. And so let's get started. Lots to do. This episode was recorded on May 16th. Keep that in mind for original broadcast on May 19th. So I'm doing this earlier in the week. Quick announcement, you can come to the Best of Wyckoff conference, see some of your favorite Wyckoffians. It's going to be a great event. There are lots of opportunity for social interaction with other Wyckoffians and workshops, 2 days of massively good fun. So please join us. I will be there as one of the presenters, and I look forward to meeting you. And now, very quick look at breadth characteristics. You've seen this before. This is just a series of different breadth indicators. Top one is the advanced decline 10-day moving average. We want to see an upward trajectory right now. You can tell here that we have a hinge of sorts taking place. There's attempts to make higher lows. These higher lows are a positive opportunity in the market, but also we have lower highs. So this is in fact a hinge. And being a hinge, it could go either way out of this area. We like the upward trajectory. We also like the fact that the Nasdaq comp just keeps pushing up in a very tight, narrow range, and it is at the top of a resistance area. So more on that in a minute. The Nasdaq up to down volume is right here. You can separate out these two different data series. They are both falling. I believe that they're very, very low here because of the debt ceiling talks and the looming debt ceiling issue that could come up in June. So this will be something that could permeate our discussion and permeate these chart indexes as we go forward today. But keep in mind that this is actually in an upward path. And so it is attempting to go upward. And if we can start to get directionality from the blue line, which is up volume, that would be very constructive. So we will watch for that. And right now we just see that we're sort of in a pause. This is a chart. I've not updated the Nasdaq 100 here. It's not important for our discussion. Very briefly, I want to point out that we are now in the last third of May, believe it or not, and seasonality becomes quite positive, or let's call it positive, into the end of the quarter from here. So that could be a welcome force at work for higher prices into the end of the quarter. And so we will watch for that. And we can see that there's definitely a family resemblance between the NASDAQ 100 and breadth in through the beginning of May. So let's keep an eye out for that. And let me just add to that Dimitri Speck, the founder of Seasonx, he is our seasonality guru. He's very, very good. He has a wonderful tool he's made available for all with Seasonx.com. He will be the featured speaker for IFTA.org in the month of May, May 25th, 1 p.m. Eastern. It's absolutely free to attend. Go to IFTA.org and register and find out more about IFTA because it's an amazing society. Really a collection of societies around the world. So check it out. Here is the S&P 500 with a breadth study underneath. And we've looked at this, so I will leave it to you to read the notes if you haven't seen this chart before. We are up against critical resistance, which, believe it or not, started back May a year ago, right here. Look at how this resistance at this level, right before the big selling climax decline, really defines the resistance. One attempt to upthrust here, and then resistance, resistance, and it's currently in a very tight, narrow range at this level, and is accompanied by if you look at the percent of stocks above the 50-day moving average on the New York Stock Exchange, there are many S&P 500 stocks that are in the Nasdaq composite, but this is just a proxy so that we can see the internal strength of the market. And you can see that it's still decisively below 50%. We really want to see this breadth indicator start to expand in an upward trajectory with prices breaking out above resistance, which has been in force now for really a year. And so getting out of this area is essentially important. I want to show you a point and figure chart study right now where we can go back to the fall of 22. We see a swing trading opportunity in the point figure work. This is one box reversal method. We count this and we can see that there are basically two count objectives that come out of this count area, and it counts right up to the area of resistance that we're dealing with at this time. Note how the point and figure chart really clarifies a lot of the noise that we've been seeing in the vertical chart around the resistance area, and very, I think, carefully and completely defines this 4150 area as a central resistance. And so note how many times it's attacked this area, but there are some good things to consider in the way that the pause at the 4100 area has conducted itself. We see that each one of the declines off of that 4100, 4150 area takes longer and goes to a higher low. And so that is a subtle attribute of absorption taking place. So we could consider that absorption may very well be the condition that we're seeing here in this structure. Now, if we start to fall down out of this area, all bets are off, so to speak. But note how we're right into this 4150 resistance area now, and we do not have volatility pushing the market back down, as in the prior two other instances at the end of the year and into March, April. So here we look at this and say, is this countable from the perspective of a point and figure structure? Let me also just say, on the case of volume, you see two big volume spikes in point and figure. It's a wonderful feature at StockCharts.com that you can look at the volume characteristics of these columns. Now, in the case of the one on the left, you can see that that is the August peak. It had a huge amount of supply in it, and it stopped the advance at 4,300. In the case of the March, April advance, much smaller advance, goes right into resistance, has a huge amount of volume associated with that push up, which shows there's supply present. And this supply needs to be absorbed, overcome, and that, I believe, is part of the reason why we have stocks stalling at resistance, because there is supply to be chewed through, and this has not been completed yet, if it can be completed at all. But let's do a tentative point figure count of this area for swing trading purposes, and we can see here that we have a substantial count, and that count takes us up to 4950, which is slightly above the late 2021 peak. And so there is a cause built here, which could actually be a bigger cause, but it does get us back to the highs of late 21, which is interesting. But we need to resolve with an expansion of breadth, as we saw in the prior chart, and we need to see a breakthrough of this resistance area. I think that may not be possible until we have some kind of a debt resolution on the debt limits that are being negotiated at this time. This is potentially an unfinished point figure count. It could grow larger. We are assuming here it's accumulation. We do have a period of higher lows off the September, October lows of last year. That's encouraging. We have diminishing downward thrust, which we just defined. We have cause building. This may be unfinished, but we can take this count and give us a potential swing trading opportunity. We must confirm with strength and breadth the upward push. If we can get out of this area of 4150 and get up to that 4350 area, we want to see the market get there and hold with confirmation of breadth. If it goes up to that level and then turns abruptly back down into the structure, we would view it as an up thrust, and an up thrust can correct back into the potential trading range structure. So we must be on our toes, but we need absolutely to see this resistance level exceeded here in short order. And we have the positive seasonality in here to make that happen. Good news on the debt negotiations could very well be the catalyst that can push through this resistance area and make institutional investors and the public more confident to buy stocks. So we must keep in mind that a failure is possible. And so let's confirm with breadth characteristics and the ability to get out and hold in a narrow range, or just continue to have an upward stride. One quick look at the Nasdaq 100. We look at this because it's got those all important FANG type stocks, the mega cap growths, which have been driving the market higher here recently in the month of May. And you can see in the Nasdaq 100 an attempt to push above into the resistance area above the May highs of, the May highs here, and it's attempting to go up, but look at how we have a diagonal triangle. This can be a sign of exhaustion, and so we will want to keep an eye on that. And also we want to pay attention to the fact that the stocks above the 50-day moving average on the Nasdaq 100 is in a downward trend. This is an upside non-confirmation of price by breadth by the stocks above the 50-day moving average, and it is below 50% at this time. And we want to see this turn back up and confirm higher prices. Otherwise, we are cautious. And keep in mind that this resistance area is a point where I think that there's really no edge for Wyckoffians at the resistance level. I think it's better to see it come out and pause and then keep going, get above, clean out all the overhead resistance. Don't buy into the resistance area. The other places where you have edge is in these areas around support. So let's see if we can resolve this hinge in breadth with an upward trajectory. Okay, we have about 12 minutes left to work on our stock case study for today. This is the most fun that I can have with you. I love doing these case studies. I love sharing them with you. This is an interesting stock, new Relic. This is NEWR is the symbol. You're looking at a daily vertical bar chart, and the scooter as a measure of momentum is below. And then below that, you can see the daily relative strength of the S&P 500. We see here two hinges. these two hinges both appear to be resolving themselves in an upward trajectory. And so this larger hinge, which goes back to August of 22 here, is quite large and has a very dynamic jump up and out of the hinge structure. The thing we like about hinges is they tend to be a period of diminishing volatility with absorption occurring, and the resolution up out of the hinge can create explosive trending opportunities because the stock is demonstrably in strong hands. We really like the look of that. We have the same thing happening again, but this time on a smaller scale is happening up here from February to the present, and it's happening at the level of overhead resistance. I'm going to define that further for you in a minute. But note that that hinge is trying to resolve in an upward direction. It is not out of its structure yet. Needs to get above the February high to really confirm that, but very constructive. And you can see that the relative strength here continues to be quite strong on a daily basis. So we have here in our notes, one thing to keep in mind, earnings per share is reported around May 23rd. This is a warning, not a good idea to trade right ahead of earnings. This earnings season has had a lot of casualties, so to speak, where the stock has had earnings reported and the stock has disappointed or broken down in some capacity. So we're not predicting that for New Relic. We just don't know. And so what we do want to do is make sure that we don't put ourselves in a risk position ahead of earnings at this point. But even if it can get above, it jumps out as it did here. I believe this was earnings also, and can consolidate this level. That could happen again up here if the earnings are constructive, and could lead to higher prices and could create a compelling trading opportunity for those of you that like to trade in stocks like this. This is not a recommendation. This is a case study. So with that in mind, let us move on to a point and figure analysis here. Now, we are looking at the point and figure 3-box method, and with traditional scaling, this is 1 point scaling below $100. And in the lower structure that we looked at, I drew the hinges in here. That lower structure has a count that goes 96 to 101 and was confirmed with a jump up and out of this area. So it backed up and off it went 96 to 101, still has compelling upside. Here is our reaccumulation structure, also a hinge. Note how point and figure can really clarify the chart structure to us. And we have here a stepping stone reconfirmation count. The count is approximately equal at this time on the breakout of this upper hinge of the count at the lower level at the 101 level. And so with approximately equal count characteristics at this time, we have a timing technique here which says that when the reaccumulation count approximately equals the lower accumulation count, that is often when the uptrend is set to resume again. Also note, and I sort of drew it in here, but this is old resistance, new support. So now this pullback and this reaccumulation has occurred in the area of support, and that also is very constructive. Okay, so let's turn finally, last chart, to a weekly chart so that we can look at the campaign structure. I really like stocks that have good campaign characteristics. Let me take a minute and explain what I mean by that. A campaign is a characteristic in a stock that could indicate that it has the potential to go into a more important uptrend for a longer period of time. Now, admittedly, we would need to have a good bull run in the stock market in most cases to be able to propel a good stock upward in a where they both the stock indexes and the stock itself can move in unison together, hopefully with the stock that's being evaluated having relative strength characteristics that outperform the broader market. And that's the reason we look at relative strength. So note a couple of very interesting things. That yellow line at the top across this area here is that overhead resistance we defined on the daily chart. We always want to go back and look at the bigger picture for perspective about the structure of the market. There is resistance overhead in this stock, but note our point and figure count that goes up to that 101 to 106, actually, what was it, 96 to 106, something like that. That count is exactly where that resistance is. And so this rally from a well-defined resistance area, it's defined by the yellow, and also going all the way back to 2020, note this resistance area with the red line across here, and that resistance area is right where the stock is residing now. If we can get a jump up above that resistance, that sets up the conditions for a more important advance, maybe akin to something like this. Now, we would look for characteristics if we could get up to that level where we go up to here, and then instead of correcting back down again, we just consolidate that level or even get above it and then consolidate it. Very bullish. Now we could look at this much larger picture for the campaign characteristics, which is that this whole area across this zone could be accumulation for the perspective of a new uptrend, and that all becomes an accumulation which is being absorbed, sets up the condition for a much larger point and figure structure. So we could count this point figure in what we call segments. Here's a segment here. Here is a segment to here. And here's a segment to here. And all of those could be places where a really dynamic uptrend could go to, stop, reconsolidate for another move higher, and have this be a stock of important campaign potential. But we first, one step at a time. And the first step is we have to get back up to resistance. We have to get through the local resistance. We have to get to the resistance at the old highs. And then we need to show good capability to jump up and out, absorb all the overhead supply, and start a more important uptrend. Last thing I want to talk about as I run out of time here is the idea of relative strength and price. Let me clean this up because I have made a mess. Here we see that in the case of the price, we want to see price above its rising 39-week moving average, which is exactly what we have here. And we also have the 13 on here. And so we are above a rising trend. That's a bullish condition, also making higher lows on this chart at the same time. We want to confirm that with higher lows and being above the rising 39-week moving average on relative strength. That is here. And we see that the relative strength is now turned up and it is above a rising 39-week moving average. Both of these conditions together are confirming the uptrend. So valuable. It's important because these are the things that institutions look for. Institutions want absolute performance in the form of an uptrend, as we have here, and they want relative outperformance where this stock is beating the S&P 500, which is how portfolio managers are evaluated in most cases. Some are evaluated on other conditions, but believe me, they all look at performance to the S&P 500. And in this case, this stock has both of those conditions in place at this time. So the other thing I would point out is the rate 26-week rate of change. I look very closely at that. As long as the 26-week rate of change is in these green shaded areas is above the zero line, that's a definition of an uptrend. And then finally, note this downtrending line on the relative strength. It is trying to get out and above that level. And so there's a lot of things that are very interesting with this chart at this time. And we are out of time. And with that, this is the most fun I can have with you. I've really enjoyed our time here looking at this case study. Remember, it's a case study and not a recommendation. And let's continue on with these in the weeks ahead. And with that, I'll sign off. Thank you so much for being here.